more homes for sale than anywhere else, realestate.com.au is Australia's #1 address in property.
Welcome back. There are 724 auctions scheduled to take place this week. The numbers are slowly starting to pick up again after the new year. New South Wales will host 142 auctions, with 86 of them in Sydney. Victoria will host 222 auctions, with about 200 in Melbourne. Queensland will hold about 250 auctions, with 88 of them in Brisbane. South Australia will hold 102 auctions, with virtually all of them in Adelaide. Western Australia, Tasmania and the NT will hold 3 auctions between them, and the ACT will hold 9 auctions. Taking a look at the most viewed properties going to auction this weekend, and in New South Wales, the top property is 43A Hearns Lake Road, Woolgoolga, which is just above Coffs Harbour. This is actually 2 large homes set on 7 acres of land with direct access to the beach and amazing panoramic views. The top property in Victoria is 20 Hobson Crescent Mill Park, which is in Melbourne's far northern suburbs. The agents say the current structure is severely compromised and needs to be demolished, so you're really just buying the land. Price guide is $270,000 to $290,000. Top property in Queensland is 1 to 3 Howard Street, Runaway Bay. This 6-bedder sits on a large 1,500 square metre block with its own 76-metre beachfront, plus a large jetty with a commercial-sized pontoon. The top property in South Australia is 59 Jervis Street, Torrensville. This large 4-bedroom home sits on about 700 square metres of land and includes 2 bathrooms and parking for 2 cars. The front features a lovely sandstone facade and the inside has been totally renovated. And the top property in Canberra is 19 Bucara Circuit, Colleen. This 4-bedder was built in 2018. It's on a large 1,000 square metre block and sits on a tree-lined street. It's close to local schools and shops. And the most viewed property on the REA Group website this week is number 221 Walls Creek Road East in Goobarangandra. It's about 2 hours and 20 minutes drive west of Canberra, or 20 minutes from Tumut. This amazing home has been built into the side of the hill to minimise its footprint and to regulate the temperature in the building. Concealed by soil and grass, most of the home is hidden from the air. Inside, it has vast open plan living spaces with 2 bedrooms, the main with a giant ensuite. The whole northern facade is a glass wall without interruption, as the home has been designed to embrace those stunning views you can see. There's also a large deck out the front overlooking the river and an undercover barbecue area. The home is 100% off-grid. The main utilities are run from the shed on the property near the road. It includes solar panels, satellite internet, 92,000 litre water tank and a smaller guest residence. There's also a diesel generator for backup power and a lithium battery bank. The home sits on about 15 acres of land and includes roughly 500-metre frontage on the Goobarangandra River. The auction for this one is scheduled on February 17th. And for more on property, I caught up with Cameron Kusher from REA Group a little earlier.
They are. Obviously, it's still a very quiet time for the auction market until we get past Australia Day. So next weekend, we are looking at a big ramp up in the number of properties going to auction, with more than 2,200, but still a very quiet time. But if we have a look at auction clearance rates, they're still hovering around similar levels to what they were late last year. But the real litmus test will be, as we see that ramp up in stock going to auction, how well those auction clearance rates hold or don't hold.
Yeah, and just how much traffic are you getting on the REA Group website now? How much buyer interest is there?
Yeah, we're still seeing quite strong buyer interest. I mean, this is the time of year where people do have spare time and they do take the time to go and look at properties. So there is still a lot of activity out there, but it's not really the point at which people start purchasing. And we're really going to start getting evidence of how that is going over the next probably 3 to 4 weeks. And that will tell us if there's been a change in direction. Because if we remember back to late last year, auction clearance rates were easing. We saw price growth still positive, but slowing quite significantly, particularly in Sydney and Melbourne, where there was a lot more stock for sale.
What sort of property price growth are you expecting for the major capital cities this year?
Yeah, our expectation is pretty moderate price growth. We did see prices rise 5.5% nationally last year. We think that this year that slows to somewhere between 1 to 4%. And that's a function of a few things. Firstly, the economy is expected to slow this year. The unemployment rate's already starting to drift a bit higher and likely to drift higher. The delayed impact of all these interest rate hikes we've had, and just generally the fact that we have had such strong growth over the last 3 to 4 years, and higher interest rates have really reduced borrowing capacity. So, for someone that owns a property, more price growth, but at a slower pace than what we've seen. And probably for someone looking to buy for the first time, not much relief, with prices still expected to edge higher and, in our view, unlikely to fall significantly.
And then conversely, what about the regional areas around the country? What are you expecting there?
The regional markets are really mixed. We don't have an official forecast for what's going to happen in regional property markets. But if you look at places close to the major capital cities, so think of Geelong, think of Wollongong, think of Newcastle, think of places like the Golden Sunshine Coast, those markets are still seeing really strong demand. They're still seeing prices rise. Bendigo, Ballarat, you can probably throw into the mix there as well. And I think those markets are still going to see moderate price growth, pretty much following what we're seeing in the adjoining capital cities. But when we get to areas further afield, that's where we're likely to see weaker housing market conditions this year. And we've already seen in a lot of those areas, price growth really slow dramatically in 2023, or even pull back in some instances.
Just moving over to WA, can you just give us a sense of how the Perth market is faring right now?
Yeah, the Perth market was the best performing market last year. Prices rose by around 14%. Remember that Perth has been a laggard for the best part of 15, almost 20 years since the end of the mining boom. Perth, a lot of demand. We've seen a lot fewer people leaving Western Australia than what we'd seen over recent years. Housing is relatively affordable in Perth compared to the other capital cities. It's now the cheapest capital city in the country, along with Adelaide. And that has driven a lot of demand. We're seeing not enough new supply of housing in that market, and that's also contributing to stronger property price growth. But when you go to WA and you talk to people on the ground there, a lot of interest, particularly from investors from the East Coast. And when you look at houses in Perth, you can get a gross rental yield of about 5%. For units, you can get about 5.5% to 6%. So for a lot of investors, they look at how much it costs, how good the returns are, how strong rental growth is, and it ticks a lot of boxes at the moment.
Now, the Reserve Bank, there's a few economists that are now pricing in cuts later this year. If the RBA does start cutting in August or potentially September, what's that going to do to the property sector?
Yeah, I mean, my view is that it's unlikely to be a rate cut that early. I think at the absolute earliest we would get one is November, but of course things can change. You would think that as interest rates come down, borrowing capacities would increase. The expectations, if we do start to get some cuts, are not that the economy is falling into a hole. The unemployment rate's still going to be much lower than it was pre-pandemic. We've had a good couple of years in terms of equity growth in properties as well. So I would think if and when we do start to get those interest rate cuts, it's likely to be positive for the housing market and sentiment around housing.
Now, last year and the year before, there was a lot of talk about the fixed rate mortgage cliff, with people being distressed, needing to put their homes up for sale because they couldn't afford repayments. But we haven't really seen that. Do you think we will this year?
As you said, we haven't really seen it. We have seen mortgage arrears rates drift a little bit higher than what we'd seen over recent years, but they're still very low on a historic basis. We have seen over the second half of last year more and more people putting investment properties on the market, and anecdotally we're hearing that a lot as well. And I think that's a sign of higher tax charges in certain areas on investment properties, but also the fact that a lot of people have leveraged into the housing market over the last 12 years as interest rates have been falling, and they certainly didn't expect interest rates to rise as quickly as they have, and now they've been caught out somewhat and put those properties on the market. So I wouldn't be surprised if we do see a little bit more of an increase in mortgage arrears. I still think it's going to remain very contained, and I think overall the mortgage cliff or the fixed rate mortgage cliff that we heard so much about has been handled pretty well. And of course, the vast majority of those fixed rate mortgages have now expired.
Cameron Kusher from REA Group, thanks for coming on the program.